is crashing. We dive into why the market is down and what strategies to employ with eToro popular investor Thomas Holland.
Yes, Spider-Man himself. Also, Nvidia busted. The SEC finds the graphics card manufacturer for hiding the number of sales stemming from crypto farms. It's unknown whether old McDonald was implicated. And the April job report is here. But what does it all mean? We'll explore what you need to know about the jobs report and how it impacts your portfolio.
Yes, it's a great joke. So guess what? Stick with us. And of course, subscribe below, hit the notification bell. Now let's get into it.
Nvidia misled gamers, fined $5.5 million by the SEC. Guys, Nvidia is getting in trouble for something it did like 4 or 5 years ago. The SEC is fining Nvidia for misleading investors on how many of their graphics cards were being sold for crypto mining. So back in 2017, you guys probably remember we had the initial pump of crypto, especially Ethereum, and the GPU graphics cards that Nvidia makes were used to mine Ethereum. So they became very, very popular. A lot of crypto miners ended up buying these Nvidia graphics cards, which is caused Nvidia to, generate a lot of sales. But Nvidia started to downplay the impact that crypto miners were having on their business. They didn't want to acknowledge it to make it seem like, legitimate gamers were buying these graphics cards. And then when crypto went crashing down in 2018, the sales, dried up and Nvidia sales got slashed. And so investors were like, yo, man, like, why weren't you more transparent about how your sales are being generated from 2017? So there was a lawsuit, and the SEC is now fining Nvidia $5.5 million. Thought it was interesting. Delano, what do you think, man?
It's very interesting, Zaid, because more recently, that Nvidia actually created a separate version of its chip that specifically targeted cryptocurrency pros. The chip was called the CMP. So they realized not only from the fallout of maybe shying away from saying, hey, some of our gaming chips are actually being bought by miners, they realized, hey, why don't we just make a specific chip for these people to kind of feed that demand? They should have obviously been honest to the investors, gamers, and everyone involved in this whole ecosystem. But, it's interesting how they shift the narrative now because they really made a chip that's specifically for cryptocurrency miners.
But $5.5 million, guys, that is tiny. That is totally tiny for a company that made $7.6 billion with a B in its most recently reported quarter. So I don't know. I mean, at the end of the day, these crypto-related companies that are kind of getting these slap on the wrists by the SEC are really more so, kind of like the first sacrificial lambs, if you will, that are, kind of paving the way for what either not to do for, what is still a very new and infant crypto space. But it does show the need for increased transparency for these crypto companies, especially if the DeFi world is going to be something that is more customer-centric, value-centric, human-centric than traditional finance. So I think this is just like growing pains. You have to kind of go through these type of things for us to get to that next level. But yeah, 5.5 million isn't really not too bad.
Yeah,
just a drop in the bucket.
A drop in the bucket for this massive company, for sure. I mean, Nvidia right now is actually struggling. Their stock price is lower along with the rest of the market. Yeah. So they definitely are feeling a little bit of pain. And I think they are somewhat embracing. I think they should have done it from the beginning. Here's a chart right there to show you the stock price. Yikes. But I think they should have embraced it from the very, very beginning. I think they have like this issue internally where they have to like, gamers love Nvidia and they want to keep them pleased. And because of crypto people, I mean, there was a shortages on GPUs. I remember just even a year and a half ago, just going to a hardware shop or a Best Buy or something like that. Like there was lines outside the door just for gamers to just get their favorite graphics cards because crypto miners just scooping them up to mine crypto. So I think with the crypto prices kind of coming down recently, that's probably starting to take a bite out of their sales there. And I think hopefully Nvidia can kind of manage the appetite for graphics cards from crypto miners and also appease their gaming fans because it's a tough balance,
It's 100% a tough balance, but it's going to also be a good thing for them. If you have demand from both sides, why don't accommodate all those people and make sure that you could fulfill that demand? Could be beneficial to the company over the long term, possibly.
Yeah.
Yeah, really interesting. Well, we're going to dive a little bit more into what's going on in the crypto space. But first, the jobs report is in, and April's numbers show a solid month of growth. The Labor Department reported a gain of 428,000 jobs in April and a 5.5% increase in average hourly earnings from a year earlier. The economy has regained nearly 95% of the 22 million jobs that were lost at the height of the coronavirus-related lockdowns 2 years ago. Crazy that it's been already 2 years.
Wow.
I know, right? But the labor supply has not kept up with a record wave of job openings. As a result, there are now 1.9 job openings for every unemployed worker.
Wow.
So for more on what is actually in a jobs report and how it can impact your investment strategy, let's turn it over to Delano for a deep dive with our no bull guide. I'm very excited about this. Educate us, Delano. What's going on here?
I'm excited too, Nicole, and thank you. So what is the jobs report? The jobs report is released by the Bureau of Labor Statistics, a unit of the Department of Labor. That agency collects and disseminates various data about the US economy and the labor market. It estimates the number of people on payroll in the US, the average number of hours worked, and their average hourly earnings, along with several versions of unemployment rate. The report consists of two main components. It's the household survey, used to estimate the unemployment rate, and the establishment survey, providing data on payroll hours worked and earnings. So what does the job report actually show? The report surveys 144,000 non-farm businesses and agencies, and it's on the number of jobs, the wages paid, and the hours worked. So job report tells you which industries are adding jobs and whether Americans are working longer hours and how fast salaries are increasing. So we know that the report shows additional payrolls and unemployment rates. So I guess many of you are wondering, is one more important than the other, or how do they work together? So if you look at the unemployment rate chart, the unemployment rate is taken from that household survey of individuals and describe who's employed, and it's based on who is on the responses. And the number of jobs added is taken from the establishment report, more commonly called the non-farm payroll report. And this survey, businesses describe how many jobs were added during the period. And so I bet a lot of you are wondering why we need to pay attention to the jobs report. It's obviously one of the most comprehensive looks we have on the pulse of the economy, and it's one of the earliest releases of digestible information that we can get from the immediate month prior. And Wall Street provides projections on these numbers. The Fed uses this numbers to get a sense of the state of the economy and in setting monetary policy. So how do the markets actually respond to this data? The report is important, and it can set a trend for the overall trading in the markets for several weeks in the bonds and in the equity markets. And when consecutive reports show a dominant trend in place, that trend could take over the market and could take a while to reverse if we don't see a reversal in the reporting trend, Zaid and Nicole.
Thank you so much, Delano. I think it's interesting to think that last stat for me really stands out. 1.99 job openings for every unemployed worker. But people need jobs. People need to work. Where is this labor shortage coming from? Does it have to do with the gig economy worker, I imagine, and more people just jumping into that line of work?
Yeah, Nicole, I definitely think that has to do a little bit with the economy worker. That also has to do a little bit with, I think a lot of people are taking that self-employed route. Now, if you look at the gig economy worker, the report has difficulty actually counting how many gig workers there are. Gig workers could be in the contingency or alternative employment arrangements, or they could be in both of those set of figures. So it's really hard. The data hasn't parsed out the gig economy worker, but we do know that portion of employees, I should say, is increasing, Nicole.
Delano, I always wonder because, I see these job report numbers and I appreciate you explaining what a lot of that stuff means. But then I'll see reports that, the previous month job report number or the month before that was revised. Like, what's the deal with that? Did someone just mess up the survey or something?
No, that's a good question. They didn't actually mess it up. They actually didn't complete filling it out. So they actually do, of course, when you're doing a survey, you actually put it out to these people. And depending on how long they take to answer the survey, the data that they're looking to collect that hasn't come in yet, the jobs report gets revised as they get more data. So you may see one or two revisions when the data is collected by the BLS, the Bureau of Labor Statistics. They'll get that data, they'll revise the numbers, and that's why you see so many revisions oftentimes in the report.
Oh, gotcha. And then the labor participation rate. I mean, we've seen, I guess, more people drop out of the labor participation. I mean, what do you think is causing that? Because I always find it very interesting that less people are participating in the workforce.
Yeah, exactly, Zaid. And parsing that down, the labor force participation rate, it's calculated by dividing the labor force by the total working age population, which is from like 15 or 16 to 64. So a couple of things on that. I think you see a lot of the people being aged out of the labor force, right? You're gonna see a lot of that happening. And it was actually an interesting stat that was shown that the labor force, every time there's a recession, the labor force participation never fully recovers to its pre-recession level. So following the 2001, the 2007 to 2009 recessions, you don't see that participation reach the pre-recession levels again. And we're seeing similar data here in our pandemic recession. So it's interesting. I think a lot of people, one, retire. They're like, hey, you either get that pink slip if you're older instead of firing someone younger, but you're like, hey, I'll just retire and take that severance and go on my way. So you definitely see a little bit of that. And I think that's a little bit of what's causing that, but it's an interesting stat.
Yeah, that makes a lot. That makes sense. People retiring, maybe people just now going back to the workforce for family reasons or whatever. That makes sense. And that's some of the things I didn't even know they were tracking. But just learning from you, it seems like an important stat.
Yep.
Well, awesome, Delano. I really appreciate you kind of helping us, educating us there. We're gonna pivot here a little bit. We're gonna talk to our guest, talking a little crypto with our guest. He is a young technical analyst with a key interest in crypto. He's also a blogger talking about what is happening in the world of crypto technical analysis, and a popular investor on eToro. Please welcome Thomas Holland. What's up, man?
Hey, thanks for having me on. Excited to go over everything.
Yeah, dude, there's a lot to talk about. I think the first thing we have to talk about right now is the mayhem, the panic, whatever you want to call it, that's happening in the crypto space right now. Like, what do you think is causing the recent crypto crash right now?
My view is that we're sort of seeing a new environment because Bitcoin and then the rest of crypto wasn't really founded until after the 2008 recession. So no one really knows how crypto is going to react to a new environment like this. So everyone's sort of seeing, will it hold up? What will happen? And then everyone's also nervous because it isn't really holding on the core technical indicators, a lot of the ones it's tended to find support on during bull runs. And so it's sort of new behavior. And then everyone's especially nervous because we're heading down to potentially lows where we could break the long-term pattern Bitcoin's seen of trending up every bull market and never returning down to its previous highs of the last run. So around 19K. If we did go down there, then that would definitely cause people to get very nervous and stressed in the short term.
Yeah, I've been doom scrolling on Twitter for the last 24 hours, and it's like you see a bunch of charts, colorful charts, technical analysis, and I know that's what you focus on. So I want to ask you a couple questions about it. Like, do you think technical analysis is something that everyone can and should do? And like, are you like a Bollinger Bands guy? Are you like a Fibonacci guy? Like what's your move there? Just talk us through your approach to technical analysis.
Sure. So I do look at more advanced ones. A lot of the time, I tend to sort of like how you were saying, doom scrolling on Twitter. There are some great content creators on Twitter where they'll actually post their self-made indicators, their research, and what they use to support that information. They'll also, like you said, doom post, say it's the end of the world, and the next day it bumps up, Bitcoin goes up 5K, and they say suddenly, we're going up to $1 million or something crazy. So you get a mix of that. I tend to, for myself, stick to more basic ones, and I think anyone can, where you've got like simple moving averages and stuff, where it's pretty straightforward. You can look it up and in 10 minutes get a grasp and just use it as one more thing to inform yourself. While I do use it to inform like my decisions, and I think anyone can, I don't think it's like the end all be all. I think it's maybe a good piece of information for the short term and medium term trends, but what really values at the end of the day is what value is the asset you're holding. Is it going up? Is it down in the long term? And is it really worth investing in?
Yeah, I think you said something very, very interesting there. Because I think a lot of people, like the very, very hardcore technical analysis people, are like just so into like all their indicators and everything like that. And my thinking has always been like people use technical analysis. You can make technical analysis fit whatever narrative you want to like fit, right? Because like you could draw lines wherever you want to draw them. I like more support and resistant lines, but there's so many, and I just like started looking into them, and I started getting a little overwhelmed, but. I think I like your answer right there. Is like you got to be careful of what you look at. Pivoting it a little bit, NFTs. NFTs had a huge run up over the last 12 months essentially, and I hear you take a bit of a different approach when doing research to NFTs. You're looking at the blockchain that the NFTs are on. Why do you think that's more important than the actual NFT itself?
Yeah, it's an exciting space, especially since it's being used for such like simple stuff where we're mainly focusing on pictures and club entrance passes and that information rather than the really important stuff, which we'll get to probably in the long-term future, like house deeds and other crazy things that
Yeah.
everyone needs. But I think that it's important to consider what chain that you're actually investing in an NFT on, specifically because if let's say Ethereum, everyone thinks NFTs, they think Ethereum because Ethereum's the largest chain. It got first to market, and that's where you're going to go if you just hear NFTs and you want to go make one. But it's also got the largest market cap. And with larger market caps, the higher it is, the harder it is to push it up percentage wise. So it's going to be a lot easier for some other chain like Cardano or Solana to push up 10% than it is for Ethereum to. And when people invest in NFTs, a lot of the time they don't actually look at the dollar amount in USD. They look at it in the actual currency on that chain. So, for example, if you talk to anyone who's selling or buying Ethereum NFTs, they're going to say, oh, it's 2 ETH, 20 ETH, 30 ETH. They're not going to say USD. So if Cardano or Solana, let's say they go up 20x, you're going to see a much larger increase in the value of the asset you're holding on the chain, which hopefully will increase the gains you would see rather than just investing in a project and it going up. But we'll have to see because there's more risk as well because it could fall apart. I mean, any of these chains could lose out to Ethereum. Ethereum's still the dominant player, and we're not really seeing anything that could break it down the long term other than technical debt.
Yeah, and again, we're not here to we don't have a crystal ball here. We're not predicting what's going to go up or what's going to go down. But you're absolutely right. Ethereum is the dominant one. It's the one that has the biggest blue chip projects. You know, the Bored Ape project, and then the technical stuff you mentioned. Obviously, like last weekend, we had this whole blow up with the mint of the other side's the land that they were minting, and the whole blockchain just stopped working. And I've been seeing a lot of hype around Solana now. And again, not trying to give any technical or financial advice here, but you're right. I think it's very cool that you're looking at other chains as well, and not just the Ethereum chain. You discuss respecting rights to NFTs. Can you explain to me what that means?
Sure. So I think that's one problem we might have, maybe not now, but in the long term, the future. Because what happens if someone makes an NFT on a smaller, less acknowledged chain? You could say Cardano or Solana. But what if it's some other chain that no one's really using and it's sort of falling to the wayside and they made an NFT like 5 years ago or even a couple days ago, and then someone goes on Ethereum, the key market player for NFTs, and they make the same thing? Who's going to pay attention to which NFT, which one's going to sell and keep the value? So that'll be an exciting thing to see in the long term. And it'll be a sort of cross-chain dilemma where people are going to have to, within the crypto community, see what really matters. Are we only going to care about this one chain? Because at the end of the day, an NFT is just, a certificate of ownership at the end of the day. So will we respect that ownership on that chain?
I never even thought about that. Like, yeah, different. You're absolutely right, and I wonder how the NFT community is going to grow and tackle that problem. That's a very, very good point. I'm going to wrap up with this. So you're a young guy. I guess you've been doing investing in crypto, and now with the market kind of being a little bit some fear in the market right now. What brought you into crypto in the first place? And now with everything going on, are you still interested in it, or do you plan on diversifying a little bit? Like where's your head at, and where do you see yourself, as far as an investor in the space moving forward?
So long term, I think crypto is great. I'm going to keep investing in it. I did sort of go all in with this previous run just because a bit of, I guess, the path of how I got introduced to crypto was, at first I heard about Litecoin. I was like, oh, it's going up so much. I put in some money. I was a little late. Unfortunately, by the time I got the money, I wanted to put it in when it was 150. It went, not this previous bull run, but the one before that, it went up to like 300. I got it in by 300, went up to 330, crashed down to the depths. And from there, and I sort of lost a bit of interest. I was doing research in college on cybersecurity, and crypto came up as a sort of research subtopic related to it. I was researching what we could use from there and apply to a research topic with a professor. And I kept researching it over time. I graduated, and I sort of learned more and more about, I guess, the financial side, the halving effect, everything that follows from it, when the event of halving happens within Bitcoin and how everything tends to follow it. And I sort of was like, let me jump feet first in. In the long term, I am planning to diversify more because I think you really have to diversify across assets. But crypto is going to always stay one of the main parts of my portfolio, probably the main one, especially on eToro.
Love it, and that's great to hear. Well, this was an awesome interview, man. I really appreciate you coming on the show. Where can people find you, keep track of you, see what you're thinking, see what you're up to?
Yeah, so on eToro, I'm a popular investor. People can go on there, and if they wanna, they can either check out any of the documents I posted. I have like a 12-page document on all of my thought process and everything. If they want to see my more real time and like small projects, my continuous learning sort of documentation. That's how I look at it. I have a Substack newsletter where I basically go over as I'm learning. What am I learning? What projects am I investigating? What research am I finding? And my analysis as I'm like stumbling through crypto and learning more and more. So that's if you want my more, I guess, exciting takes.
I love it, man. I really appreciate it. That's awesome. I'll definitely check that out. I encourage everybody to check it out as well. Thank you for coming on the show, man. I really appreciate it.
Yep. Thanks for having me. Hope you have a great day.
Take it easy.
Thanks.
Welcome back, guys. That was the talk to Tom Holland today.
That's
dope.
real Thomas Holland.
Nice and easy.
A pleasure getting to see him and meet him. And nice interview, Zaid.
Thank you.
All right, guys, that does it for this episode. Be sure to like, comment, and subscribe. Hit that notification bell, and we will see you tomorrow. Have a good week, or start to your week.
We out.
Hey guys, thanks so much for tuning in. Be sure to like, comment, and subscribe, and hit that notification bell. We'll see you tomorrow.